Mark, what are some of the other important factors that borrowers should consider once they've taken out a mortgage?
Well, at least when people take out a mortgage, they're taking on debt, and that debt is tied to the home. So they need to ensure that they can continue to repay that debt, and more often than not, they need to consider that if the place burns down, they've got insurance to rebuild it if it burns down. But they tend to not think about insuring their own life or their own ability to earn an income. And we talk about what's a person's greatest asset, and most people will say it's their house or their superannuation or whatever, but really a person's most important asset is their ability to earn an income. And if they lose that ability to earn an income, then how's the mortgage going to be repaid? How are they going to live? And statistically, more than half of households won't be able to live more than 4 to 6 months if they suddenly lost their income today. So that means that suddenly you're looking at selling your house, or if you don't do that, the bank might move in because you'll go into arrears on the loan. So when people take on a mortgage, they really need to consider things like life insurance, which only pays out if you die. Then there's trauma insurance, which will pay a lump sum if you contract an illness, a defined illness that fits within the range of what the insurance provides for. And then there's another one called income protection insurance, which basically, if you become incapacitated and unable to work, then it will pay you not quite your full salary, but a good proportion of your salary, depending on where you set it at, for a period of time until you're able to return to work. So that gives people the comfort that while they're recovering from their illness, they can have a bit of security in the knowledge that they've still got an income coming into the home and able to meet their mortgage repayments and other lifestyle expenses. So it's very important for people to consider that, because Australians are statistically the most underinsured nation in the world for personal protection type insurances. So it doesn't matter whether you're an investor or whether you're an owner-occupier, it's something that you need to consider.
Speaking of statistics, you mentioned some pretty interesting ones before to me, so what were they?
Well, I just got some research that came through from a presentation we had from the other day from one of the life companies, but I'll read them here. But for every one home that's lost through fire, there's 4 homes are lost through death of the people who own the home, and 48 homes are lost through disablement. So if those 48 people had income protection insurance, they wouldn't have lost their home. So again, come back to, we all insure our homes against burning down, but statistically there are far more homes that are lost for reasons to do with your ability to earn an income. So if anything, that should probably be at the top of the shopping list as far as insurance goes. And
another hot topic for borrowers is interest rates. So where do you think they're headed?
Interest rates, yeah. Well, we got a reprieve earlier this month, which there was 18 out of 25 leading economists predicted that interest rates were going to go up. I'd suggest that on the Wednesday morning, 18 of those 25 economists were given please explains, because I'm sure they get paid a lot of money to predict accurately where interest rates are going. But look, I think that we will probably see one more rate rise by the end of the year, and there's still that possibility of an out-of-cycle rate rise by the banks, and certainly Commonwealth Bank's been making a bit of noise about it, about moving outside of the Reserve Bank, and we could see anything from 0.1 to 0.15, I think, sometime. Whether they align it with a Reserve Bank increase or whether they just do it within the market, we'll wait and see. But I'd suggest we're probably looking at a small rate rise from the banks as well.